Hey everyone, welcome back to the channel. Today I'm going to take a look at Meta, and I'll start by looking back at the DCF I made in 2022 when I first started to consider entering a position. So quickly, let's jump back in time to the middle of 2021, and we can see that Meta peaked at around $400 per share. And then it actually pulled back to around $300 a share by the end of the year. By April of 2022, the stock had pulled back even further to around $200 per share. And this is when I first started thinking about making a position. So let's jump into the DCF I made back in April of 2022. Let's take a look and see what my assumptions were. I had revenue growing, but not nearly at the same level they had in the previous years. Meta was coming off growth rates of 27%, 22%, and 37% respectively. I took a conservative view and had them pulling back to low double-digit growth, and then dropping down to high single-digit. This would take their revenue from $118 billion all the way to $326 billion in a decade. The next big assumption I had layered in, I left their SG&A at 20% of revenue, R&D in the high 20s, CapEx in the 20s, and slowly decreasing to 15%. With all of these assumptions, the free cash flow went from $21 billion in 2021 to $64 billion in 2031. This gave us a rough valuation between $400 and $900 billion for Meta, just kind of depending on the assumed growth rate in perpetuity and the discount rate. At that point in time, the market cap was $530 billion, so somewhere sort of in the middle if we use the conservative assumptions. At that point in time, I did not enter a position. I felt they were pretty fairly valued. However, in October of 2022, the stock pulled back even further to around $130 per share. At this point, I felt there was a big enough margin of safety to actually enter a position. I believe in the most conservative of cases, they were worth $200 per share. I bought 100 shares at this point in time. And actually shortly after buying, the stock dropped down to $90 before rebounding and soaring past the $200 mark by March of 2023. I've actually updated my DCF to see if I still feel the same about Meta and if I should consider exiting my position. Before I hop in, I want to take a quick look at how they actually performed in 2022 and 2023 versus how I projected them to. In 2022 and 2023, I projected revenue to be $132 billion and $151 billion respectively. Actual revenues were $116 and $134 billion. So even in what I thought was a conservative estimate, I was actually still pretty far off. Now the thing that saved me here is Meta went into a mode of efficiency. When they did this, they started cutting costs heavily, and I had SG&A at 20% of revenue. It actually ended at 23% in 2022, and then 18% in 2023. R&D, 26% each year, landed at 30% both years, so a little bit higher actually than I thought. CapEx, I had around 24%, it landed at 27%, and then dropping down to 20%. So it's actually pretty close here. But the thing I missed was the trend of costs coming down. So in 2023, we can see SG&A drop from 23 to 18%, R&D dropped from 30 to 29, and CapEx dropped to 27 to 20, all with 16% growth on revenue. Now, when you extrapolate these cost-cutting assumptions out for the next decade, that's where we see the big payoff. I'll circle back to this in a minute after I walk through my current DCF. Jumping into my current DCF, I have similar assumptions to revenue as I did previously, using a relatively conservative growth rate in high single digits, and this takes the revenue from around $134 billion to $301 billion in a decade. The big changes I've made to the model is layering additional cost savings. I have SG&A going from 18% of revenue all the way down to 15%, R&D going from 29 to 20%, CapEx, I've actually used an aggressive schedule going from 20% all the way down to 6%. I believe after Meta builds out their network for AI, they'll cut these CapEx costs significantly. And I anticipate that happening by 2027. I talk a bit about this actually in my recent NVIDIA video as well. So with all of these assumptions, I get a valuation between $600 billion and $1.3 trillion. Meta is currently trading around $1.2 trillion, so on the higher end of my valuation. Now, jumping back and comparing to my previous model, here's the big differences driving the valuation change. Our free cash flow in April of 2022 totaled $300 billion for the next decade on $2.2 trillion in revenue. My new model has $506 billion in cash flow on $2.2 trillion in revenue. So we've kept revenue actually roughly the same, but we've increased cash flows by about 66%. This has resulted in the valuation going up by $200 billion on the low side and $400 billion on the high side. It makes it pretty clear why these cost cuts are actually happening recently in tech, and they've been very well received by Wall Street. Based on my updated model, the current share price of Meta is actually near the high end. I'm personally not going to be entering a larger position based on this, but at the same time, I probably won't sell my position either. I believe Meta is fairly valued currently. There could be upside if they can find a way to continue growing revenue in the high teens, but outside of AI, I'm not sure what they will use to turbocharge revenue. They have almost half the world's population using their platforms, so it's going to be slow growing from a user perspective, in my opinion. So unless if they can generate more revenue per user in lower income areas of the world, I think growth is actually going to slow. I've linked both the models we've looked at today below in the description. Feel free to take a look and mess around with all of my assumptions. You'll need to save a copy of them if you want to be able to edit it. As always, thanks for watching. Leave any comments or questions below. Thanks so much.